So most people don't actually know this about me, but the most money I ever made from investing has been with index funds. But for the first 5 years of investing, I actually hated index funds, and I basically hated anyone that spoke to me about index funds. I thought that every single index fund investor was basically just a loser. They were boring and they were not willing to put in the work when it came to investing. I'm just being fully honest. However, today I am one of those boring loser folks that doesn't want to put in the work when it comes to investing. I kind of sound like a hypocrite, but I'm telling you the truth. And guess what? I've made most of my money just by doing index fund investing. So if you're watching this video and you're curious about, hey, which way should I invest? Index funds or picking stocks? What exactly should I do? The answer is going to be in this video, and watch this video all the way through because it might change the way you invest forever. Now, if you guys don't know me, my name is TommyBryson, and as always, like this video and tap out also subscribe and hit the bell so you get notified. Now, the very first thing, guys, is what exactly is an index fund and how does it actually work? The answer is very basic. It's very simple. And think about it like this, guys, okay? So an index and fund, index fund. You have two words in there. An index is you trying to track the performance of something. A fund is people putting their money together for the fact of trying to basically buy asset classes, or in this case, investments. So when you think about an index fund, you're basically investing and pooling your money together with other people to try to track a certain part of something. In this case, when you say an index fund, you're trying to track the overall market performance for a specific sector. Now, Tommy, what do you mean by that? A specific sector, okay? The answer is, well, think about it like this, okay? Let's say, for example, you're interested in technology stocks, okay? Because you know they've been performing great, okay, for the past decade or so. They've been doing awesome. So you don't know how to analyze companies like Apple or Tesla or Microsoft. You don't know what the intrinsic value of these companies actually is. So instead of buying individual companies, you say, hey, why don't we basically just put our money into an index fund that tries to track the overall performance of tech stocks? So you might invest your money into an index fund that contains the 100 largest tech companies in the US. So if you're like me, you're probably starting to get curious and you're asking, Tommy, does something like this actually exist? The answer is yes, it does exist. Okay, so you have two options here, and it's basically VGT, it's the Vanguard Information Technology ETF, and they try to replicate that basically. And the price right now is $462 per share, but the return has been around 45%. Do you need this much money? The answer is no. You can invest with like $10, doesn't matter. And you also have second option, which is basically QQQ, and for the year is actually made about 47%. So yes, this actually does exist. You do have ETFs, which are another topic for another day, but you do have index funds that do try to replicate technology companies overall, and they actually do exist and they do make good money. Okay, so back to the video. That's the idea. So when you grab your money and you pull it together and you invest it in here, you're basically trying to get the overall performance for the tech stocks in the US. Now, what is the benefit? The benefit is you're not having to pick stocks. The benefit is you're going to make the average performance. But what is the con? The con is that if one of those companies in there goes up by like 100%, well, your index is not going to go up by 100% overall, okay? You're going to get the average performance because the money is split between those 100 companies. But there is also another great benefit, and that's basically that, hey, if a company also goes bankrupt, it's not really going to affect you because another company is going to move up into the top 100 list also. That's basically it. If you don't understand it and you have questions, just comment down below and I'll break it down even further in another video. But it's just you investing to track the performance. Now, you might be wondering, Tommy, what is a mutual fund? Well, it's the same but different. A mutual fund doesn't try to track performance, it tries to outperform parts of the market. So let's say, for example, you're invested into a tech mutual fund. You're trying to beat what the index tech mutual fund is going to do. You're basically trying to outperform the average. However, there are some cons to that because it's going to be more expensive, because they're trading and selling more resources, and in reality most of them don't even beat the market overall. Okay, so it's usually going to be a waste of money. So Tommy, if index fund investing is so easy, it's more diversified, it's safer, it's cheaper, it just makes more sense by what you're saying, then why do people tend to resist the idea of investing into index funds? And why specifically did you resist index funds for so long? Well, the answer is I'm not like a different person, man. Like I'm like the average guy just like you are. So I suffer from the same exact things that the average person suffers from. And those are three things. Number one is greed. I can be greedy, and most people can be greedy also. Most people do not invest into index funds because they are greedy. You know, the average is 10 to 12% returns. Well, you want to make 15%. You want to make 20%. You want to double your money overnight. I suffer from that also. I wanted to make a lot more money. That is basically just greed. Now, these days, I'm a lot more different in the sense. I'm still kind of greedy because everyone has that, but I'm more like, founded on reality. I'm willing to just say, hey, I'm going to invest this much money. I'm going to let it build up. And I know for a fact the average millionaire is in their 50s. So if I keep investing, I'll get there eventually. That's the idea. I'm not that much in a rush. Now, the second reason is going to be, guys, because of ego. Everyone has ego. And egos funded or like founded or found on unrealistic expectations are the most dangerous things possible. Because when a person has an ego, it's already a turnoff. But when a person has an ego that's just unrealistic, is even worse. Okay, so for a fact, okay, I definitely thought that, hey, if Warren Buffett, Charlie Munger, Peter Lynch, all these guys can do this investing thing, I can also do it. If they make 20% to 25% a year, I can also do it. Now, I have this very smart way, I would call it, to actually self-analyze myself and see if I'm being realistic or if I'm just using my ego. And it's basically, I say this, okay? I look at the person and I ask myself, what do they have and what did it cost them to get it? If what they have I want, but the price they paid, I'm not willing to pay it, I just basically stop worrying about it at all. So when I saw that Warren Buffett had billions of dollars and I saw that the cost was basically reading financial statements, newspapers, becoming an expert in industry and all this other stuff, and spending 6 to 8 hours a day reading and analyzing, I was like, yeah, I'm not willing to actually do that. And I basically stopped. Okay, so when I'm thinking about doing something, I basically just use that to kind of set me on the ground and say, hey, you're probably not going to do that, so just let it go. Okay, but for me, I like investing, so I'm willing to invest every time I get paid, let that money build up over time and make me wealthy over time. The third reason people actually end up rejecting index funds is because of hope. They hope that they're going to basically hit it big. It's basically gambling. It is speculation. More than often, it's not going to work. Now, am I trying to turn you off to investing into individual stocks? The answer is, if you really want to do it, I can't stop you because you're going to do it anyways. But for the most part, if you're the person that just basically wants to get rich from investing, and you have no interest in spending 6 to 8 hours reading about financial statements and calculating intrinsic values for companies, then I'm definitely trying to stop you from doing this because you're not going to make money. I'm just being honest, okay? There was a study that basically showed the average investor is making like 2 to 4% annually. I mean, that sucks. I mean, you're not really making any money whatsoever. It's being eaten up by inflation anyway. So when you ask me, Tommy, what actually made you change? What made you click to index fund investing? The answer, you're probably not going to believe it. But the day I made the most money by picking stocks was the day I decided never again to invest that way. And you might be wondering, how does that make sense? How does making money make you stop doing something? The answer is very simple. It was during the pandemic. During the pandemic, I was basically still investing into index funds, but I was also picking stocks, okay? Now, I invested a good chunk of money into index funds, and then I had a good chunk of money left over. And I was like, what am I going to do with this? I actually invested some money into Delta. Yeah, the airline company that crashed and went down like crazy. And my whole idea was very simple. I made a video about it. I was like, hey, I'm going to buy this company because I believe people are going to go back into air travel. They're going to go on vacation. The travel industry is going to recover. This cannot be permanent. It can't be forever. This is not reasonable, okay? And over the past few years, companies in the airline industry have gone bankrupt and they do recover by doing a restructure, okay? That was my mindset, okay? I did some research and I bought it. And I basically made about 128% of my money. It was a lot of money, okay? It was a good chunk of money. And ever since then, I stopped investing this way. And you might say, Tommy, what just happened? You did research, you made an investment, you made money. What's the problem? The problem was my research was lacking. My research was trash. I had no real foundation and idea about the actual company, the overall structure. I had no comparisons, okay? What I really had was a good guess. And what I really did was get lucky. And that's when my ego broke apart. That's when my greed went away. And that's when my hope was like, this is not really good, okay? So what I basically did was say, hey, I made money here, but I know I just got lucky. I made money in my index fund investing, but I know exactly what I was doing. Now, am I willing to get better at individual stock investing by spending 6 to 8 hours reading and researching and reading a lot of books? No, I'm not. Am I willing to make money when it comes to index fund investing over a long period of time by just investing my money and basically let it do passive stuff and it's like more cost effective, it's cheaper? Are you willing to do that? The answer was yes. And what I basically said was then do what you're willing to do. Now, do I regret all of my years of investing into individual companies? The answer is absolutely not. You know why? It's because basically, I do think the person that hears wise words and listens is probably smarter than the person that hears wise words, ignores, fails, and then listens, okay, because of their own experience. But I do believe that when you actually fail and then you listen, you have conviction and you have experience. So by me doing all those things, now I have conviction that this is actually the best way to actually go about it. But if I actually did it from the very beginning, I probably would have made more money. I'm just being honest, okay? Probably would have made more money. But guess what? I would always be thinking in the back of my head, what if? What if I would have done this way and that way? So overall, guys, if you learn anything from this video, it's that basically index fund investing is one of the best ways to invest. It's passive, it's cost effective, it's more diversified, it's less risky. And if you're wondering, Tommy, what index do you personally invest into? Well, if you made it all the way to the end of the video, here you are, I'll tell you. I invest all of my money, absolutely 100% of it, just into the S&P 500. That is my only investment. Tommy, why? Well, it's the 500 largest companies in the US. It basically is 80% of the output of the US stock market. On top of that, if, for example, the only way I actually lose all my money if it's the US actually goes down and burns. But guess what? If we burn, most likely we're bringing the entire world with us. And that's my mindset behind the way I invest. Now I know this investment's gonna make me like around 10% on average annually, and I'm very good with that. I'm fine with that. That's the idea, guys, okay? I know exactly what I'm doing, and this way there's no guesswork actually going on. But guys, thanks for watching. As always, like, subscribe, hit the bell so you get notified. If you're a part of the Patreon, I appreciate you guys a ton. And here's the highlighted person for this week. And if you're not part of the Patreon, join us. It supports the channel a ton, and I appreciate it a ton. So the link is going to be down below for that. Up here is another video. Over here is my face. And as always, long-term team officially out.